Tokyo's coach drivers spent February bombarded by a Better Parking Manners leaflet campaign, a fussy push to spare the capital from a supposed road-clogging surfeit of foreign tourists. But will it be the traffic wardens or the Bank of Japan that clears the streets first? The congestion peril may be exaggerated, but the underlying numbers are not. Japan's inbound tourism boom continued apace last year, with the visitor tally coming in just shy of the 20 million mark. A quarter of those were from mainland China, a 107% increase over 2014. Analysts at Nomura predict another 22% gain in overall tourist numbers by the end of 2016, and see the total surpassing 30 million by the time the Tokyo Olympics open in 2020. Even more striking is the rise in tourist spending, up 71% in 2015, and at 3.5 trillion yen, now ranked in value alongside some of Japan's most famous export industries, auto parts, steel products, and electronic components. Brokers, citing benefits for retail, transport and property sectors, heavily pitch the tourism story in their efforts to convince reluctant global fund managers to pile back into Japan's stock market. The fly in the ointment here is the yen, and the tendency of more bullish observers to underestimate the price sensitivity of Chinese shoppers. At 120 yen to the dollar, a Cartier watch was cheaper in Tokyo than in Seoul or Hong Kong. According to sales staff in Tokyo's Ginza district, the maths still work at current levels of 113 yen to the dollar, but start to fall apart if the Japanese currency heads much higher. Since the Bank of Japan's negative rates announcement in January, the yen has flatly defied the governor's gambit and has strengthened. Some now expect it to break 110 yen to the dollar over the next couple of months. After 3 years supporting the Abenomics story with its weakness, the yen's supply and demand fundamentals changed last year, argue analysts at JP Morgan. Retained corporate earnings abroad are being repatriated, and investment trusts that bought a record 17 trillion yen in overseas assets last year are expected to start unwinding some of that. The BOJ's 2-day policy meeting ends on Tuesday, and very few economists expect it to move. Currency markets are on a hair trigger, but so too are Mr. and Mrs. Zhang of Guangzhou, currently planning where to go this summer.